Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, for those who are new, this session is about the markets. We try to cover the top events that are expected to be moving the markets. We do technical analysis, and the event happens every day, Monday to Friday, at exactly 11 a.m. East African time. So today's session, since it's Monday and we have very few events happening on the economic calendar, we'll be taking a whole week overview. So we'll be trying to understand what are the top events that will be expected to be moving markets this week. We also try to understand, as the title suggests, the current strong rally in gold and why we are seeing gold breaking into new all-time highs. And once we do this, we'll cover technical analysis on major currency pairs, look at major stock market indices, commodities, and once we do this, hopefully everyone will trade from an informed perspective. So once you join in, kindly say hi on the comment section, and these will confirm that everything is working just fine. So kindly give me a sec. So we'll begin this by going through the economic calendar. Sorry, I have something on my throat. Awesome. So we'll be going through the economic calendar, try to understand the top events as per the calendar before we move on to the next part. So this is the Forex Factory calendar, and as you can see, there's quite a number of events that we're expecting this week. We know that over the weekend, we had the OPEC / JMMC meetings. So this is where the Organization of Petroleum Exporting Countries meet, and then they discuss the market outlook as well as their production quotas. So as per the meeting over the weekend, they agreed to increase production by an estimated should be 137,000 barrels per day in October. So this is something they have been doing since May, consistently increasing output, and this has had downward pressure on oil prices. So outside of that, we had a flurry of data from Japan, ranging from bank lending year over year, which had a surprise uptick to 3.6% compared to an expectation of 3.2%. Then there is a current account where Japan's current account missed expectations at 1.88 trillion yen, down from 2.4 trillion. Final GDP price index remained the same at 3.0%. But then the big surprise as of this morning was Japan's final GDP for the second quarter of the year, where it was up 0.5% compared to an expectation of 0.3%, and also the prior reading of 0.3%. So clearly, with a surprise uptick in final GDP, this led to a strengthening of the Nikkei 225 index, but also the weakening of the yen. So there has been quite a number of developments from the Japanese economy. And one of the key developments that happened over the weekend is that the Prime Minister Ishiba decided to resign on Sunday. That was yesterday. And this is after he lost majority in both houses of parliament. So the real question is, how will Japan pick its next leader after Ishiba's resignation? So with Japanese Prime Minister Shigeru Ishiba announcing his resignation, attention turns to who will next year the world's fourth largest economy. So the process to pick Japan's next leader is far more complicated than before, as Ishiba's Liberal Democratic Party, which has ruled Japan for most of the post-war period, and its junior coalition partner lost their majorities in both houses of parliament during his tenure. So, funny thing, one of the key reasons why he had to resign and he lost the majority was the increasing inflation in Japan, with a key focus on rice. Rice became too expensive that the prime minister had to resign. So the process to pick Japan's next leader is more complicated. So on the party leadership race, First, the LDP must pick a new president to replace Ishiba. The date has not been set yet. In the last party leadership race in September 2024, candidates needed to secure 20 nominations from the party's lawmakers to be eligible to run. So clearly, it will be a crazy week for Japan with a lot of political news. And of course, we expect this to have an impact in the market. And of course, if you go to the FinV's website and you try to understand the current market movements, you'd notice that the biggest mover in the market as of this morning was the New Zealand dollar, which was up 0.64%, Australian dollar up 0.53% against the USD, whereas the weakest currency as of this morning is the Japanese yen, which has lost by 0.11% to the USD. So now going back to the economic calendar for the day, we have seen the trade balance in China also missing expectations at 733 billion. We expected 750 billion yuan, but then it's still an uptick from the prior reading of 705 billion yuan. So USD denominated balance was much better than expected. And then we had the economy watcher sentiment from Japan, which slightly improved to 46.7, up from 45.2 in the prior reading. So fast forward at 9 a.m., we had German industrial production month over month, which had a surprise uptick of 1.3%, higher than the expected 1.1%, and of course, a big change from the prior reading of negative 1.9%. So German trade balance missed expectations at 14.7 billion euros. This was lower than the expected 15.7, and also a slight drop from the prior reading of 14.9 billion. So going forward for the rest of the day, we'll be expecting the Eurozone Centix Investor Confidence Survey. That's at 11:30 a.m. Both low impact news as well as consumer credit data from the US at 10 p.m. So going forward for the rest of the week, we'll be having quite a number of events. One of the key highlights will be the Chinese CPI at 4:30 a.m. on Wednesday, where we see the Chinese economy diving deeper into deflation territory. So deflation territory basically means that prices of general goods that are mainly consumed by the average household in China are basically going down. So for consumer price index, we expect a reduction of 0.2% year over year, whereas the producer price index reduction of 2.9% year over year. So this basically means that prices are dropping in China, and whenever you see these, it's usually not very good for the economy, but very good for the people. So in this case, we should be expecting the People's Bank of China to have a reaction in case the deflation worsens. And in most cases, whenever you see deflation happening, central banks tend to print more money, and this tends to boost the stock market. So we'll also be getting a sequence of inflation reports from the US, ranging from the core producer price index. PPI is expected to increase at 0.3% as per the month of August, whereas the core PPI also 0.3%. So main data point will be the US CPI. It's the main highlight event of the week, especially for US dollar traders, where US inflation is expected to increase to 2.9%, up from 2.7%. So this is a worrying trend, seeing inflation on the rise again, and these might trigger or push Powell to now consider cutting interest rates, especially on the September 17th meeting, and that should be next week. So the market is largely expecting the Fed to cut interest rates, and an increasing inflation might be quite a headache for Powell. So markets will be closely watching this. Remember, interest rates were being cut as inflation was moving towards 2% target, but now since the low that we saw in May, inflation has been consistently moving to the upside, and that's for the US economy. So other than that, we expect an ECB meeting this week, where the European Central Bank is expected to hold interest rates steady at 2.15%, and this should be the second consecutive meeting where the ECB decides to hold interest rates. So far, the ECB among the G7 has had the lowest interest rates, and they were the fastest to cut. Inflation is still reasonably low, and now they have headaches with what is going on in France, with the political turmoil as well as the bonds turmoil in France. So Other than that, we'll be getting GDP data from the UK, where we're expecting 0.0% growth in the prior month compared to a 0.4% growth in the month before that. So, of course, a slowdown in GDP would be expected to weaken the pound, as well as the FTSE or the UK 100 index. And lastly, on Friday, we'll be looking at the preliminary University of Michigan Consumer Sentiment Survey, as well as Inflation Expectation Survey. So those are the key highlights as of the economic calendar in this week, and there's more which we'll be looking at shortly. So first things first, we know that last week was majorly dominated by bond sell-off, and that's why we saw yields running really high, and this sent panic across a wide number of currencies, mainly in the Eurozone and the US. So we had the pound dumping, especially on Tuesday last week. But then now that the bond selling is easing, we are seeing some of these currencies recover. So if you look at the bonds, bond yields of the major economies as of this morning, a majority of them are moving to the downside. You can see Japan's 10-year is down 0.01, Australia 0.06. You can see Brazil is unchanged. Russia is down. India, Canada is down. A little unchanged. So an increase in bond yields basically means that investors are dumping bonds, and that tends to be bad news for the economy. So France was the worst hit, as well as the UK, and now you can see the yields are dropping, meaning that the rate of people dumping bonds is reducing. So other than that, there's more updates. So we already talked about Japan stock market index, which was up 1.45% on Monday, with the latter hitting record highs after Prime Minister Shigeru Ishiba announced over the weekend that he will step down. His resignation followed intensifying rifts with the ruling party and weeks of pressure stemming from his national election defeat late last year. So the move also came as Japan faced setbacks in securing a trade deal with the US while trying to shield its key auto industry from steep tariffs. At the same time, Japan's second quarter GDP growth was revised higher on both annualized and quarterly terms, underscoring resilient economic momentum despite tariff headwinds. So other than that, we talked about Germany's industrial production being up, in this case rising 1.3% month-over-month in July 2025, and this is following a revised 0.1% decline in June and in line with market expectations. Trying to see another article here. Just give me a sec. So as we already mentioned, inflation is in focus as September Fed meeting nears. Hot to watch this week. Key highlights here. Earnings reports last week offered few updates on the consumer, with Dollar Tree suggesting high-income consumers are trading down. Lululemon results showing that the leisure trend appears to be fading, and American Eagle results showing that a strong advertising campaign still moves the needle in 2025. So the week ahead, that is this week, will bring investors to an even lighter earnings calendar, with Oracle, Adobe, Kroger as the main highlights. Of course, we'll be having other companies such as GameStop. One particular company of interest I might suggest you put in your stock watch list is called AeroVironment. They are set to be reporting their earnings as soon as this Tuesday. So it's a drone company listed in the Nasdaq in the US. So far, year to date, it's up 46.91%. And with the earnings coming up this Tuesday, there's a good chance we could be seeing increased volatility in the stock. So other companies that are doing really well in the similar industry include Kratos Defense, which is up 145%, and Palantir Technologies, which is up 102%. So other than that, still looking at other key highlights as of this week. Yes, the Apple iPhone Day is September 9. This is when we'll be expecting Apple to be launching a new iPhone. In this case, it's dubbed Apple iPhone 17 Air. So Apple will host its annual fall event on September 9 at its Cupertino, Cali headquarters, where the company is expected to debut its latest iPhone and Apple Watch lineups. So the biggest news from the show should be Apple's highly anticipated iPhone 17 Air. Think of it as an iPhone that's been dabbing in Ozempic like the rest of us. At 5.5 millimeters thin, it will be far slimmer than the standard iPhone and iPhone Pro. The standard iPhone is 7.8 millimeters thick, while the Pro is 8.3. So in this case, they are taking it a notch higher by basically reducing the size. So according to Apple watcher Mark Gurman at Bloomberg, the Air's thinner design could come with some trade-offs. The phone, for instance, could have just a single wide-angle camera rather than a dual camera setup found in the base iPhone or triple camera setup found on Pros. The phone will also reportedly come with a smaller battery, which, unless Apple is able to work some of its software wizardry, could impact battery life. That could make for a hard sell to consumers who generally want phones with more cameras and larger batteries. So, case in point, Samsung own super thin Galaxy S25 Edge wasn't exactly a volume seller when the company launched it earlier this year. So, but iPhone 17 Air could also serve as a blueprint for Apple's foldable iPhone, which Gurman said Apple will launch in 2026. Samsung followed a similar formula with the S25 Edge, debuting a thin phone and then revealing its Galaxy 7 Fold Galaxy Z Fold 7 in July. So clearly, there will be more updates, and of course, this will be a big mover for Apple stock. So the main focus in the markets, especially in the stock markets, will be on Apple, and of course, the company is reporting earnings. So the phone, which features a design so thin that it barely has room for its USB-C port, is selling very well. That is a Samsung Fold 7, which jumped 50% versus its predecessor. So in addition to the iPhone 17 Air, Apple is expected to debut its standard iPhone 17 as well as iPhone 17 Pro and larger iPhone 17 Pro Max. The iPhone 17 Air will replace the older Plus model, which was the weakest seller of the main iPhones. So clearly, investors will be watching closely to see if there is a change in the device, mainly to see if there's any more advancements or whether they are just replicating the same model. So that will be a key highlight for this week. So I'm still trying to see what else I may have missed. Yes. So as per the strong gold rally, we have already seen the market hitting what? Above $13 per ounce of gold. There's a very, very strong projection from Goldman where they are suggesting that it's possible that gold could rally to $5,000, and this is if the Fed yields to Trump and goes ahead to cut interest rates. So further Fed rate cuts would basically reduce the yield on bonds, and as a result, we could be seeing investors flocking for the safe haven asset, which could drive the rally to around $5,000 per ounce of gold. So currently, as we speak, we are at 600. So this is quite a big call. So on the oil market, there's quite a number of developments that have happened over the last week and of course over the weekend. So Russia-China gas deal may seal new gas world order. So in this case, Russia and China agreed to build Power of Siberia 2, shifting over 100 BCM per year of gas towards China and cementing a new East forecast gas order. Europe will rely more on costlier LNG, worsening its energy price disadvantage versus China and eroding industrial competitiveness. So the signing of the Power of Siberia 2 pipeline deal by the presidents of Russia and China was perhaps the biggest news to come out of the two leaders meeting earlier this month. It was also the deal that may very well make the new global natural gas flow order permanent, potentially interfering with President Trump's energy dominance ambitions. So clearly, that's a big development. And in this case, it basically boosts China-Russia trade relations. Then the next update, still on oil, where China is pouring billions into Brazil's energy and oil. So we know that earlier this year, Brazil joined the OPEC cartel, and with the condition that they keep producing more oil. So Chinese investments in Brazil more than doubled in 2024, reaching $4.18 billion across 39 projects, making Brazil the top emerging market for Chinese investments. The power sector, primarily solar and wind, attracted the largest share of Chinese investment in Brazil at 34%, while the oil industry accounted for 25% of the total. So clearly, Brazil is set to expand its oil output, and this basically drives bearish sentiment on oil prices, with OPEC plus countries looking to expand production. So Ukraine drones hit one of Russia's biggest refineries, and this happened on September 5. September 5 was Friday last week. So Ukraine attacked with drones Rosneft's Ryazan refinery in Russia. Again, the commander of Ukraine Drone Forces, Robert Brovdy, said on Friday, as eyewitnesses reported explosions, a fire, and thick smoke near the refinery in the region southeast of Moscow. So this may explain why oil prices have been moving to the upside as of this morning, mainly because it's impacting the supply of oil since Russia's biggest factory was hit over the weekend. But long term, I maintain a bearish view on oil prices. So lastly, we know there has been quite a fight between India and the US in terms of India buying Russian oil. And of course, they reaffirmed their commitment to keep buying Russian crude oil. So India will continue buying crude from Russia as it looks to cater to its interests, Indian finance minister said on Friday, amid US pressure over India's Russian crude purchases. Where we buy our oil from, especially a big ticket foreign exchange item where we pay so much, highest in terms of import, we will have to take a call on what suits us best, the minister told News 18 television channel on Friday. So that's it for the updates on oil. And of course, we know that last week on Friday, we saw the bets for a Fed rate cut rising to 97.4%. In this case, the market pricing in a full 25 basis point rate cut by September 17th, which will be the next meeting by the Fed. However, as of this morning, we have seen the odds reduced to 90%, but in this case, the market is getting more aggressive. So after the odds reduced to 10%, it means that now there's a 10% possibility that the Fed even goes for a much bigger rate cut, which would be 50 basis points. And that is on the 17th of September. So in this case, if there is an increase of the size of the rate cut to 50 basis points, then that would likely mean one thing. Could be seeing a very strong rally in US equities and further weakness in the US dollar. So we should be watching this closely to see if this keeps increasing over the week. And if there is a high likelihood of a much bigger Fed rate cut, then that should drive market sentiment over the week, especially after the CPI data. So on other news, still on oil gains on prospect of more sanctions on Russia. OPEC plus output hikes in to be modest. So as I mentioned, the OPEC plus countries are expecting to increase output by 37,000 barrels per day. And of course, that is expected to drive oil prices lower. But then with the Russia's plant being hit over the weekend, then that basically means that short term, we should be expecting rallying oil prices. So on the other hand, Trump says European leaders will visit US this week to discuss Russia-Ukraine war. So it might be a big news this week following the meeting closely. So if European leaders come to an agreement with Trump, and whether they decide to continue supporting Ukraine in the war against Russia, or whether they call for a peace agreement, that decision could bring in volatility to the markets. So it's a key event to closely watch this week because it has the potential to cause a lot of momentum. So on the other hand, approaching the last item. Yes, so as the ECB meets this week on Thursday, there is quite a number of questions that investors will be looking to answer. Of course, we expect the ECB to be holding interest rates steady. So the number of questions we want to answer are: one, What will the ECB do on Thursday? Of course, the expectation is to hold at 2%. The ECB is all but certain to stay on hold in September, of course, in this case, around 2%. So next question is, does the US-EU trade deal change the economic outlook? So we know that the Eurozone got into a trade deal with the US set at 15% tariffs. So as per the ECB President Lagarde, she said that the deal is not far off from the ECB's baseline expectations, which was 10%. So some economists caution the tariff hit to the economy remains uncertain and will increasingly feed through in the months ahead. Further escalation is also a risk. I would be a bit more critical or skeptical about the deal than the ECB will probably be in its meeting, said Inc.'s global head of macro, Karsten Bresky. So in this case, 15% tariffs could have an impact on the Eurozone, especially on the inflation. And if that happens, then that could influence the ECB's decisions, but not as per the meeting on this Thursday. So clearly, the ECB remains data dependent over the next coming months. So 3, is the ECB done cutting rates this cycle? Not necessarily. Several policymakers have not ruled out another move, and the ECB is divided on whether inflation will tick lower or higher than expected. Economists polled by Reuters reckon that the ECB is done. Traders see around 17% chance of one more cut, but only by next summer, which would basically mean around August next year. So those who reckon the ECB is done say Lagarde set a high bar for further moves, and the outlook will need to deteriorate to warrant one. Some expect a hike next, given the German stimulus. So of course, the ECB being this divided, there is a high likelihood that the Fed will not be cutting, that the ECB will not be cutting rates further this year. And as a result, we could be seeing a changing divergence in policy between the ECB and other central banks. So other than that, question number 4, what does France political turmoil mean for the ECB? So it's another source of uncertainty, but too early to influence policymakers' thinking. France government is likely to lose a confidence vote on Monday as it tries to gather support for unpopular belt tightening measures. So I believe that's the one item I had left in the updates today, that today there is a confidence vote in France Parliament on the Prime Minister. So the Prime Minister might be kicked out, and it's very likely today. And of course, this could influence the French stock market as well as the euro. So be on the lookout today. As much as there's no big news on the calendar, the no confidence vote could be very big as of today. So if markets become more stressed, there may be a renewed focus on whether the ECB might buy bonds using its transmission protection instrument scheme designed to support countries whose debt comes under pressure and through no fault of their own, which is hard to say for France. A snap election could widen the French-German 10-year bond yield spread to around 90 basis points from 76 now, and this is from analysts. But similar levels last year did not see the ECB deploy the TPI, and there was no major contagion to other countries that might make it more likely to act. So in this case, if Beirut gets a vote of no confidence, a good chance we'll be seeing increased volatility on the French stock market, on the French 10-year bonds, and of course on the euro. So we'll be watching this closely for the day. So lastly, is the ECB worried about central bank independence? For sure. The US administration attempting to remove Federal Reserve Chief Jerome Powell or Governor Lisa Cook would pose a very serious danger to the global economy, Lagarde says. The Fed yielding to demands for lower rates could stoke inflation and tighter financial conditions, spilling over to the Eurozone and push the euro even higher, policymakers and economists one. So we know that the war is on between Jerome Powell and Trump, where Powell has been maintaining or holding interest rates higher for longer as he continues to observe inflation in the US economy. But then Trump is arguing that the Fed should be cutting rates towards 1%. And of course, Trump is seeking to get a majority in the Fed or the FOMC in a bid to try to manipulate interest rates lower for the US economy. So if Trump gains control of the Fed, then the ECB is worried that there could be spillover spillover effects to the Eurozone. So other than that, I think we are done here. So I'll be now looking at the top earnings that we're expecting as of this week. So on Monday, no one will throw the earnings, just Planet Labs. Tuesday, Cases General, Mission Produce, and of course, we mentioned AeroVironment. So, sorry, that was Monday. Tuesday, we have Corn reporting. AeroVironment, AVAV is the company I mentioned earlier in the presentation. GameStop will also be reporting, as well as Rubrik and Synopsys. Chewy is just a handful of names on the earnings calendar, with a sped surprise retailer slated to release its fiscal second quarter results ahead of Wednesday's open. Then we have Oxford Industries, we have Kroger and Lovesack. On the tech side, we have Adobe, which will be big earnings on the tech side. And I believe there's one more company that we had already mentioned. In this case, it's Oracle, which is also reporting earnings this week. So other than that, I believe you can jump straight into some technical analysis and try to understand what's happening on the charts. So I'm seeing a lot of comments in the comment section. So let me check real quick. Good morning, Joseph Gisharu. You can see Daniel Kingori in the house. And shout out to Daniel Kingori for being the first to join and comment. Thrill Dante, Apollo, good morning. Jimmy Reagan, Naomi Njoki. Good morning, everyone. First question here is from Apollo. Interesting. I always thought Japan was trying to increase inflation, where the country has had deflation and negative interest rates for decades. Inflation is Japan. I thought was necessary for growth. So yes, Japan has been trying to fight deflation for decades, and they declared a win against deflation last year. And so far, the inflation has remained above 3% for a while. And the goal was not to have inflation, but rather to have wages rising. So they really wanted to have an ultra easy monetary policy, print more money, keep the currency value low, and as a result, they expected the level of wages to be increasing. But now they are facing new challenges, especially with their bonds markets, and as a result, we have seen inflation being a very political issue. And as a result, as of this morning, the reaction we have had is the JPY weakening, and of course, the Nikkei 225 index making a very strong rally. So what caused the jump today on crude oil, despite OPEC agreeing to increase production and the fear of supply glut? So as I already mentioned, Ukraine hitting the biggest oil factory in Russia caused the strong rally, likely caused the strong rally and influenced market sentiment as of this morning. So of course, disrupting supply creates scarcity, and as a result, you get to see market price moving up. So what is the effect short term and effect of the US dollar if the interest rates are reduced? So cutting interest rates generally has a negative impact on the currency. And in this case, we expect the US dollar to be weakening. So as we have been seeing with central bank decisions since the year started, about a week before the official announcements, the markets tend to price in the possibility. So in this case, we are seeing the dollar being weak as the markets are pricing in a Fed rate cut, which could happen next week. So on the official announcement date, we tend to see the opposite. So once the Fed announces they have cut interest rates, we could potentially be seeing the dollar strengthening, as has been the case with other central banks over the course of this year. So what is the impact of Ishiba's resignation? Do we expect a strong JPY or a weak one? So normally we tend to see markets avoiding political uncertainty, and as a result, we are seeing the Japanese yen being weak. So despite opening the week with a gap higher, all we are seeing is the yen weakening. So most likely the yen could weaken once they have a new minister. But before that, we could be seeing some weaknesses in the yen, but big bets on the Nikkei 225 index, which is headed for a new high. Will projected interest rate cut move the markets? It's already been priced in, and US economy has withstood high interest rates, save for anticipated rise on inflation. Stocks are at all-time highs. So the rate cut move is expected to drive the stocks higher, and we already saw that last week with SP 500 closing just 1% shy of its all-time high. So if this is confirmed by next week, good likelihood the market will be pricing it this week, and the rally continues. Of course, as long as rates keep coming down, there is a good chance that we continue seeing a strong rally in US equities and the dollar weakening. So good question from Wangari Patrick. So to be on the side of bigger rate cut by the Fed, what should be the readings of the crucial inflation data to be released in the course of the week? So if inflation is moving considerably towards the Fed's target of 2%, meaning that it drops from 2.7% to let's say 2.4 or 2.5, that would give the Fed more leeway to cut. Rising inflation would be a headache. Let's say it jumps to 2.9 or even 3%. In that case, cutting interest rates amid rising inflation is usually a very bad idea. So in this case, if we happen to see a much weaker inflation report, then that would likely increase the odds of a 50 basis points rate cut. So the consensus is 25 basis points. So 50 basis points would completely be a market surprise. And if that surprise happens, then we know that it would lead to a dumping of the dollar and a very strong rally in US equities. So good question. Is it possible you review last Friday's NFP report and its lesser impact this time? So last week's report was largely priced in. Almost everyone expected the NFP numbers to miss. So this is mainly because June, July numbers were revised lower, showing big weakness in the labor market. So with the numbers coming in way weaker than expected, it basically means that the job market in the US is hurting. Unemployment rate rose to 4.3%, and as a result, we expect the Fed to act. Remember, the focus is on the central bank, not the NFP numbers themselves. So now that the non-farm payrolls are out, unemployment is rising, there's a good chance that we will be seeing a cut on 17th, and that is all the market is focused on. So the real question is whether it will be a 25 or 50 basis point cut, but it's almost certain that the Fed will be going for a cut. So today I'm getting way more questions than usual. If the French PM is actually kicked out, how will this affect the euro? And what if he survives? What will be the effect? So if he survives, that will be good on the French stock market, but then bad for the euro. But then if he goes, the market is already priced in. So most likely the euro could strengthen as a result of this. So think of it as an uncertainty. And once the investors have certainty that there is a new PM, then they regain confidence in the market. So more likely that the euro could benefit once there's a new leader. And on the other hand, the stock market might be getting some losses, especially if there is a sudden shift. So whenever there's a sudden shift in leadership, it causes panic. So the CAC 40 index could be taking a hit today. So good question. Do you think gold will continue making all-time highs after Powell cuts rate? So investors always try to find the best return for their clients or for their shareholders. So when interest rates are high and bond yields are high, we tend to see investors going for more bonds because they have a consistent cash flow and that gives them a good return. But then when central banks are cutting rates aggressively and moving towards 1%, this really impacts the return on bonds, and as a result, investors seek other returns. In this case, gold has been a pretty good safe haven asset for the last 2 years. This year is still one of the top performing assets. So more likelihood that if the Fed continues cutting rates, investors will be flocking to gold. So good chance that we'll be seeing more upside potential. So good question. You mentioned Japan wanted to achieve wage increase without increasing inflation. No, they wanted high inflation, but the real outcome they wanted is wage increase. But then once inflation is on the rise, then they would use monetary policy to control inflation. You know that wages don't go back down. Once wages rise, they don't go back down. So as a result, they would control inflation, but then let the high wages continue running. And this would be beneficial, especially for the retirees, the guys who are close to retirement. So I believe I've answered all the questions. So let's do some technical analysis real quick. So yeah, this is a chart of gold. And as you can see, as of this morning, we hit a new all-time high of 3,600, and now we pushed even higher, and now the all-time high is that 617. So in terms of technical analysis, there's no candlesticks on the left. So there's no candlesticks to compare this rally with. So it's basically just more and more momentum. And as of this morning, if you captured this low, we've had quite a good rally. In this case, I would say what? This is already 328 pips. And there's a good likelihood that this continues to be the momentum for the week. So any form of pullback, for instance, what we saw on Thursday, I remember we discussed this. We had a pretty good bounce, and Friday we got to our target. So this week remains the same. Pullbacks on gold are to be bought. So on the other hand, looking at the dollar, it has been pretty weak as of this morning. Let me cross some things here. So the dollar index being pretty weak as of this morning basically means one and only one thing, and this is that other currencies will be taking advantage. So first currency to consider is the Australian dollar. So clearly, after the strong rally push on Friday last week, we had a pullback towards midnight, and today we had a bounce, and now we are moving on to a new level that we were seeing being the resistance, especially in the month of July. So clearly, the upside potential is still there, despite really struggling around this range for about 3-4 months. Now we are on the verge of a breakout to the upside. So let's keep monitoring whether there will be a break between above 0.65910, and this is the resistance area here. So on the other hand, looking at pound USD, after the big sell-off on Tuesday, Wednesday, Thursday, Friday, we recovered 100%. Market got back to normal, and now we'll be looking for a potential break above here. So on the forward chart, you can see it was a pretty big dip, and the market recovered immediately. So real question is, will the pound be breaking this resistance area? So if you observe this particular trend line here, you'd notice that it's serving as a resistance, and now we are seeing the pound yielding some ground to the USD. So let's see what happens once we get back to this particular trend line and see if there will be a nice bounce towards the upside. So potentially looking for buys in the pound, betting on a weak dollar, and of course short run targeting the Friday's high. So on the euro side, we are seeing a very strong bullish momentum as of this morning, despite the big sell-off late last Friday. So on the forward chart, you can see we are still on a channel. We moved all the way up to the upper trend line, pulled back, but as of this morning, it seems more likely that we will be going for another retest of the upper trend line. So as of dollar trading against the Swiss franc, you can see there was a big sell-off on Friday, and today it seems to be continuing. And from the forward chart, it seems that we are finally breaking out of this channel and accelerating lower, with potential targets being around 0.79189. You can see the momentum here and how the market is pushing lower. So for the dollar yen, we opened with a gap, with the yen losing to the dollar. It continued losing in early morning trading. And then during the Tokyo session, we headed to close the gap. So you know, weekend gaps tend to be closed on Monday. And now that it seems like the market is closing, once we close this gap, there's a good likelihood that the market bounces from here and now heads higher. In this case, the dollar gaining against the yen, given the political instances happening in Japan. So the idea here from a forward chart is that we have been on an 8-9 week long sideways momentum, and eventually we'll have a direction. So as for now, the market was on a downswing and then upswing, and the upswing is not yet complete. So despite closing the gap, we should be looking at more upside potential. So for the Nikkei 225 index, we had a pretty nice breakout of these falling wedge. So these happened last week. Notice how we had a breakout, retest, and a continuation. So the market rallied all the way to our target as of this morning. The target was 43,935. So we have not yet hit that target. So we can see the slight pullback. But now some momentum is coming in, and we could be seeing one more push upside. So for the UK 100 index, here we had this bearish channel. Eventually the market broke out. Notice how we had a breakout, retest, and continuation. And now a push towards the prior high might be playing out this week. So clearly, the beginning of the channel is all the way up. So after the pullback, you notice that we are still on a pretty strong bullish momentum. So from the daily time frame, you can see we had about 6 consecutive sessions of bearish momentum, but now we are seeing the market reversing and pushing to the upside. So clearly, pullbacks should be looked at as potential entry opportunities. So for the China A50 cash index, here we saw the market hitting a double top, pulling all the way back up, and now it seems likely that we could be headed further back downwards. So it's a pretty easy pattern to observe, these long upper tails being rejection of higher prices. And every time this has happened in the past couple of days, this has led to a consecutive bearish momentum. So notice 1, 2, 3, and now the fourth one. So we wait for confirmation to see that the potential for a big drop towards 14,563. So on oil side, despite having a very strong bearish momentum as per last week, we discussed this on Thursday, and we got to the target on Friday. This was a key level support, and the market bounced very strongly. So as of this morning, we have seen a very strong rally in oil. So we don't expect this to last for long. So the idea this week will be to be looking for short selling ideas. Those short selling ideas are not ripe yet, so it's a wait and see. So we know we should be looking for short selling ideas, but we are not yet there. So let's be patient, observe, and see signs of bears coming in. So as for US equity indices, despite the big sell-off on Friday, we have seen a very strong recovery, with the Nasdaq looking to reestablish contact with the new all-time high. So good chance that after this bounce, we get to this area here. So you go to a small time frame, the 15 minutes chart, and you notice how the market bounced pretty strong last week on Friday, and today there's a potential for continuation. So as per now, during this session, the market seems range bound, but at some point we should be seeing a break. So for the Dow, it's still the same thing. We bounced from here. We expected the market to hit a new high. It did on Friday before dropping, and this week we look to reestablish contact with that all-time high. So same case applies to SP 500, which was on this particular trend line here. So after the big sell-off on Friday, notice how investors are still pushing for a new high. And of course, a rate cut is clearly a pretty good boost for bullish momentum. So Bitcoin still stuck in this bearish momentum, hasn't broken out yet. So you can already see this. So we should be observing for a potential break, and on a small time frame, say the 1 hour time frame, you can see we have been seeing a sequence of lows that are getting higher and higher over time. So a potential break to the upside would likely trigger a bullish momentum trade. So this has not happened yet, so it's a wait and see kind of scenario. Whereas looking at New Zealand USD, pretty strong as of this morning. One of the strongest bullish momentums, and of course we are not yet to the trend line. So the trend line is somewhere around here. So good chance that the bullish momentum continues and we retest 0.59423. So France stock market index has opened with little to no volatility despite expected momentum. So what we are seeing here is a range bound market. I would say it's moving more or less sideways. I would consider this as a key level resistance, and we should be observing for a potential break. Further weakness in the index could drive us way lower to the support area around 7,520. So for Germany, which had a pretty good reading on GDP, we saw this on the economic calendar. There was a big jump as of this morning. There is now a pullback, but the idea is still more bullish momentum, where we have seen German factory activity largely recovering. So perhaps a retest of last week, Friday's high. So good chance that we will be seeing this over the course of the day or tomorrow. So for the Eurozone stock market index, we saw the market having a big dump on Friday, an attempt to recover, but now we are looking at more of a sideways momentum. So clearly it's a wait and see. As usual, it's a slow week. Swiss stock market index, which was the most bullish in Europe, got to a key level resistance. And now you can see a pretty technical trade that after we got to that key level resistance, the market is nose diving back down. So of course, good chance that we see the market extending the bearish momentum to the origin here of the strong move on Thursday. That's around 12,333 price level. So Norway stock market index, here we are seeing more bearish momentum. So from the daily time frame, we tested a new high, and since then the market has been bearish. So from the 4-hour time frame, you can see more of the bearish momentum. So we projected this last week, it kept playing up, and we are not yet there. So good chance that the bearish momentum continues this week. So silver, which basically hit a new high last week, is a little bit behind gold. So gold went for a new high today, but silver is lagging behind. So good chance that we see silver also printing a new high as of today. So the bullish momentum is there, and a good chance that we get to the prior high of $41.473 per ounce. So as gold continues, the correlation is expected to continue. In this case, getting to the previous high and breaking it into a newer high. So that's it for the day. I believe the session was a bit long, about 1 hour to be specific. Thank you everyone for your questions. Just trying to see if there's anything else I missed. So there's a question on Signal Center. Kindly email support@fxpesa.com or call your account manager. They should be able to help with a Signal Center integration. So last question here, what is the reason of the stock market not reacting to interest rates like in 2023? Fed hikes and still stock markets were still high. So the interest rate decisions have largely been very politicized, especially in the US and the Eurozone. And as a result, the markets have been pricing in these moves about a week before. So if you go to your charts and you study history, what has been happening since the year started, usually the biggest moves are about a week before the rate decisions. So thank you very much for joining the session. And of course, if you've been an avid follower of the Bullish Banter podcast, then you know that we have a new episode that was posted 2 days ago. In this case, myself and Jesse Ogola, we interviewed George FX Mastery. So make sure to check it out. I'll be dropping a link in the comment section. Here we discussed a wide number of things, ranging from his trading strategies, his trading journey, where he started, and how he got where he is today. So I don't want to share too much, but hopefully you'll find it of value. And if you enjoy the podcast episode, leave us a comment. And if you leave your feedback, we'll really appreciate that. So thank you, everyone. For those who are new to trading, make sure to check out the links in the description below to register for a trading account, and check out the Novice to Pro course on FXPesa YouTube for you to get started learning and trading. So that's it. Enjoy the rest of your day.